I see my timeline is full of despair. I see this looks really bad, but things are down like 10, 15%. What's going on? And then you go look on TradingView. So I'm okay, something clearly happened. So you go on TradingView and you see these wicks. Yeah. Wicks like I've never seen. I've never seen wicks like that.
These liquidations and sell-offs. I mean, this was insane. I was like yelling at my phone when I was trying to get back to the computer quick enough. But they all feel so grim, and they're always buys.
This episode is brought to you by Kraken Custody. You'll hear more about them later in today's episode. As always, investments in blockchain technology involve risk, terms, and conditions apply.
All right, everybody. Welcome to For Guidance, live at DAS, Digital Asset Summit in London. Excited to be doing this live this time. Joined today by Avi Feldman, 1000X. What's going on, man?
Hey, what's going on? Thanks for having me on the pod. This is always fun. Love listening to you both. So
good day, tradition. Yeah, and we got Quinn. Quinn's jumped in for the afternoon, so I'm actually gonna be joined by my compadre, host in chief. Yeah. So
it's Tyler this week, so everything's PG. We can do it live. When you record with Tyler, you can't do live.
Oh yeah.
Some bombs in there. Yeah.
It's kind of fun though.
Yeah. Oh, so you gotta have those guys. Yeah. Yeah, it feels like just like a tradition that we do these at the conferences. So.
I know. We did it at DAS in New York last time. Yeah. We had Jonah, but Jonah's busy. He's got 3 kids. I've got 0. So I get to go to London.
Dads are home, and then we're all here.
I get to go to London, have a little fun.
Yeah.
Run around.
Yeah. I love it.
See you, Jonah.
Yeah, exactly. Man, so a lot's happened since the last roundup we had. That was sometimes you just get punched in the face,
Yeah, I mean, that was one of the most crazy days, not just because of the price action, but because of sort of how I found out about it, is that I actually like barely noticed because I was off the desk that day, which was a horrible decision, but I had to be. But it was one of those things where I checked the CoinGecko and I went on, it was like, okay, all right, yeah, I see my timeline is full of despair. I see this looks really bad, but things are down like 10, 15%. What's going on? And then you go look on TradingView. So I'm okay, something clearly happened. So you go on TradingView and you see these wicks. Yeah. Wicks like I've never seen. I've never seen wicks like this.
COVID without COVID.
Even COVID. Like I distinctly remember trading COVID. I was glued to my desk for 24 hours straight the night of March 12th, 2020. I was glued to my desk. Mm-hmm. And it was a slow cascade. Bitcoin started at about 7,700 and bottomed out at 3,000. Massive dip, way bigger than this dip. But it was a cascade and you felt like the world was ending. Mm-hmm. But you also understood kind of what was happening, right? Like, okay, so the NBA just shut down their season. Donald Trump got up there and said that there's this virus that's taking over the world and it's coming from China. And we were sitting there going, okay, this is serious. This time it was just boom.
Yeah.
Right. One liquidated. One tweet from Trump. It's always Trump. Yeah. One tweet from Trump, and just the market falls apart.
Yeah.
It was, Yeah,
it was insane. And then you look at the different exchanges too, and the wicks are so different. So obviously it looks like, people have been doing a lot of postmortems on the timeline the last couple of days, trying to figure out what happened. And it seems like a lot of the pain came from finance. And it was actually an interesting debate I was listening to a couple hours ago at the conference here, and we had Hasib and Jordy Alexander debating this idea of, can synthetic dollars create the next Luna style crash? And they're going both ways. Jordy was arguing that it is going to be the next kind of Luna style crash. Hasib was on the other side of things, and that is more just an idiosyncratic risk on the Binance side, where they did not hard code to tether USDT, whereas something like Aave was hard coded in terms of the USDT.
But only as of recently.
Yeah, only
very lucky.
Yeah,
very lucky.
Yeah, so that's where a lot of the pain happened. We've learned since that, I saw a headline that Binance has since refunded people that got whacked by that USDT peg where it was not hard-coded. So that seems to be obviously like, my read is that the market was primed, like positioning was stretched. We've seen open interest elevated for a while. And, we were going back and forth on the last couple of roundups, just being like, all right, we can see the macro backdrop, and that's still bullish in my opinion. We can get into this, but it was clear where we were going. It's just, you got to navigate the positioning dynamics. We're trying to do our best, but at the end of the day, you get one really negative out of nowhere Trump tweet. That's what happened.
Yeah. I mean, one thing that I'll say about the stablecoin stuff is that it's a function of liquidity. What happened on this wick? It's a function of liquidity. It's that at the moment that everything came apart, nobody was there to buy. And so obviously if you have huge amounts of liquidations coming down the pipeline, every buyer is going to wait. So it all happened very quickly. There was a cascade, but it was at the end of the day technical.
Yeah, exactly.
And the positions that were liquidated were mostly delta neutral, actually. A lot of positions like these, whenever you see a tweet out there talking about a market maker blowing up, market makers are delta neutral. So generally, for every long, they'll have a short paired against it. They'll be long Bitcoin, short Zcash or something like that. Which would have been a horrible trade that day. But you know, so what happens is when the market starts collapsing in on itself and there's no liquidity, their long will get liquidated, and that means they'll be uncovered on their short, which means they also have to offload their short. But liquidity is kind of all over the place. What doesn't happen is what happened with Luna. So when Luna collapsed, they had billions of dollars of Bitcoin on their balance sheet that they needed to sell to cover their losses. Market makers don't have huge inventories of just outright long positions to offload on the books. So you don't see this ongoing issue where the market continues to bleed out. You get this one big technical blow up, and then the market works through the liquidations and then reverts to normal. Which is why you saw a lot of the, more trader guys get on sides over the weekend saying, okay, this is right now a technical sell-off. It could turn into a fundamental sell-off if Trump keeps pushing China, but right now it's not. And that's where I stand even now with Bitcoin. I think it's 114, 115. Yeah. It's like we're done with whatever happened, in my personal opinion.
Yeah, that was your read. Yeah.
Well, one, it's always a funny observation, these liquidations and sell-offs. I mean, this was insane. I was like yelling at my phone when I was trying to get back to the computer quick enough. But they all feel so grim, and they're always buys. That's one thing that every time there's a different reason in your head or in the narrative that's like why it is, or is this the end of alts forever? And which some it is, obviously, but it's always the buy on these cascades because it's just, like you said, so much technical selling. And even if it was catalyst driven or exploit driven or whatever the ultimate explanation becomes, it's just tons of either forced liquidations or voluntary unwinds of positions that at the end of the day is technical. And we've seen it, the bounce. Yeah. But my observation when I'm over the weekend as well and in the immediate was I'm watching Bitcoin and it's not even moving. I mean, it's down a couple percent. And I'm like,
quick wick to like 103 or something. And then we're back.
And we always, I know you talk about on 1000X too, everybody, crypto participants don't even really own Bitcoin anymore. It's even though it's a top performing asset, it's the ETFs and it's a different market. But so part of it probably has to do with like the average participants just gambling on all this bullshit. But that is incredibly bullish. I mean, this thing went down to the bottom tick on Coinbase was 107, maybe. Like,
I think it was like 102 by
second.
Yeah.
And so I'm looking at, and I'm sitting there, and it's like, and even over this weekend, I'm like, what do you buy? On the one hand, okay, the safe play is Bitcoin because that is just, it didn't even it sucked this liquidity. It wicked December 2024 highs for a second and came back to higher low. So like. One, I'm just like, God, man, that is so bullish Bitcoin. But, then you don't get as much of the reversion play as, you see some of these alts that are down 34.
You could get levered up.
Yeah. So got wiped out, get right back in the game.
Yeah.
But
compared to something like Atom, I saw traded at basically like literally zero.
Yeah.
So that was my biggest takeaway was like, I kind of was just, I'm still kind of, because with that level of liquidation, obviously the Carnage was in alts, but everybody's cross-margined. Everyone's got, you're selling, it's like baby out with the bathwater. It's like in TradFi when there's a big bad day, everything's the same on a sheet of paper. It gets tossed, so gold's down 1 or 2%. And that's your signal to buy, big sell-offs in traditionals because you're like, okay, if gold got hit, the safe haven.
Yeah.
In this case, it's 100%. Like, holy cow.
Yeah.
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. Trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming-chartered special purpose depository institution, and deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders. The first machine economy free zone is live in the Emirates, and it's all happening on Peaq, the machine economy computer. Head to peaq.xyz, that's peaq.xyz, to find out how you can benefit from the age of automation, or click the link in the show notes to find out more. As always, investments in blockchain technology involve risk, terms, and conditions apply.
So I guess the big question now is, like, you zoom in, you're like, all right, so what's changed since the last time we talked a week ago? And obviously there was, for a moment, some fundamental changes where, okay, we had China coming forth with trying to squeeze the rare metals market situation. And that led to Trump to come forth with 100% tariffs. You're like, okay, that's a fundamental change. But then, you know, as he does, by Sunday, it looks like they're trying to off-ramp that again. So you got to pair that with being the catalyst and also this fundamental change. But it does look like, you know, we're going to walk back a little bit. Big question now is, there's that Trump Xi Jinping summit at the end of the month. And you're like, all right, we have this air pocket where they can still escalate and be able to still de-escalate afterwards. So there's still that potential tension, tail risk. But at the same time, like, when I look at my macro framework right now, nothing's changed for me. I don't know about you guys. But
No, nothing's changed, because I think these tariffs, which I align with you on, Trump has consistently walked them back, and I think he will continue to consistently walk them back, because the reality is an actual trade war between the U.S. and China is catastrophic. And Trump, as you can see, I think a lot of this, you just have to understand the guy. He cares so much about his image. I mean, that's why he's trying to go for the Nobel Prize. You know, that's why he's always talking about the stock market, right? He cares a lot about his image. And the one thing that he doesn't want to do is be responsible for some sort of, you know, catastrophic meltdown. Additionally, I think that he understands that the market could be in a precarious spot if earnings start coming back badly. I think everyone sort of understands this. So that's the other side of it, is that I do think, maybe a little contrary to what you guys have discussed, or maybe you agree with it, that we're in a position where if earnings for one company comes back, it's okay. 2, you're looking at a little bit shaky. And 3, you're thinking, okay, so this rapid growth that we've seen from this AI boom, is that unraveling? Let me get out. Mm-hmm. And so it's really important to see continued growth right now, in a way that it probably wasn't six months ago when you did have some bad earnings calls. So that's the only other thing I'm nervous about. I'm wondering, what do you guys think about that?
I think they will be okay. I think I agree with you about this patch of a lot of the data I look at, forward-looking economic, and it points to a pretty Goldilocks type environment next year, starting even as soon as January. The government shutdown added a wrinkle to this, because you have nerves, not loud nerves, but nerves around a growth scare and this patch that is not helpful when they potentially, I've read some pretty credible things that they might use this as even a bigger Doge, which is still a risk of like permanent layoffs. So I think that's sort of in the backdrop. And then when you just take Friday's price action, like, we cut through, I mean, it was indiscriminate selling.
Yeah.
You know, crypto started to sell off first. And one of the first things I wrote was, the best trade here, we covered our longs. I was long. It got whacked.
Good move.
But
good move to cover.
And I didn't put, I was like messaging some buddies. I was like, short Mag 7 here, right when it came down. Because that's the other thing here, why he sort of has to taco is, 40% of our stock market, Mag 7, has 20 to 30% of their revenues from China. So you want to pick a big battle here, sure, but then you're going to take a big hit, and they can't have that. So you have that backstop, and so I thought that was, still think that's area is the most at risk. I actually think like Bitcoin outperforms that going into the year end, but navigating this, and I still do think there's an escalatory potential. Like, because if you're China, why didn't you turn in the knife here?
Yeah.
When you know he had it.
You have the runway.
Like, and I do like, I think they do de-escalate ultimately, but you kind of,
how high do they go first?
On the business from China, that's such a key point.
Yeah.
That I'll tell you a story. So my dad's an old school guy. He's an economist. That's where he comes from. And so we're talking about the tariffs, and he's saying, I don't understand. And he's a really smart guy, in my opinion. He goes, I don't understand. How can we have all these massive tariffs and the market just keeps going up and up and up and up? Somebody's got to pay for it. The consumer's got to pay for it. The government's got to pay for it, or the company's got to pay for it. And the answer is none of the tariffs affect the things that are driving the market right now.
Exactly.
They don't affect the Mag 7.
Yeah.
Who cares if Ford comes back? If Ford blows up tomorrow, the market is not down that much.
Yeah.
Right?
Yeah.
and they probably get bailed out anyways.
And they right. So that's sort of the tension here, and that's why the market reacts so forcefully to China tariffs, is because that's the one that matters.
Yeah.
The rest of the tariffs, they actually could be net beneficial for us in terms of raising money for the government.
Yeah.
And these companies that are getting hurt are not the drivers of the stock market. Right?
Yeah. And then you add in this layer right now of this, you keep hearing about the K-shaped economy, but I think it's really true. I've been saying this recently, and I've been getting some flack for it, but the stock market is the economy, and I truly believe that, because in this K-shaped world, yes, the bottom leg of the K is struggling right now, near recessionary, but the reason why we have higher GDP growth is because asset owners, their stocks keep going up, because the Mag 7 keeps going up, and then they keep spending, and then that creates higher GDP growth, and then they keep spending and consuming. So even though, yes, tariffs might hit that lower K, they're not the ones spending and driving GDP growth.
100%.
It's the Ponzi of equities going higher, giving more income for the rich people to keep spending like crazy. So you just have this continuation. This is insane.
100%. I mean, look, and I'm sure you guys experience this too. I know myself, if I look at my portfolio and it's up a lot, like I'm getting that extra guac.
Yeah.
It's like I'm contributing to the economy a little bit more.
Yeah.
And that's what's really important here, which is why I think he walks it back. But I don't want this bullishness to get misconstrued by the people that are trading meme coins and altcoins. Because I do genuinely think Friday was a turning point for altcoins.
Yeah.
I think that it's going to take a very long time for that exuberance to come back to the markets in the useless stuff. The good stuff, where flows are actually going, are doing really well. Like BNB is doing ridiculously well because Binance is doing well. And I think a lot of it's off the news that Trump's considering, letting CZ operate in the U.S. more freely, considering pardoning him. I don't know if that was real or not, but the looking at allowing them to have perps in the U.S. was real. They just got a potential investment from China Renaissance Bank for $600 million. And so things are looking up for Binance. And so BNB, as a proxy of that, is going to get flows. And it could actually turn into an institutional asset, and that's what's happening right now. That because the market's institutionalizing, the stuff that can get big money flows is going to do well. SNX does well because people are nervous about Hyperliquid, and they're like, oh, this thing's ridiculously undervalued, and Kane's a good guy, and Xi Jinping turned into a meme coin, and he really likes it, but it has a real product. It's filling a real niche, which is, hey, maybe there's worry about these other decentralized platforms. Let's try SNX. The vast majority of other things out there, like, what's a Cardano going to do now? Right?
You saw the reaction.
Like for the people that were levered long Cardano, are they going to get levered long Cardano again?
No. Yeah.
Yes, probably.
I mean, yeah, okay, fair enough.
We say this every time.
Fair enough. Or they'll show some reference or something to get a few bucks and then put that back levered long. But
okay, fair enough.
But they'll long it from down here after the dribble, not from.
Yeah.
Maybe I'm being too, because this is what I want to happen. Like I want.
We say this every time, and then 6 months later, and then it's like,
But it's 6 months later. That's the key.
Yeah.
6 months. You need
The marginal bid for alts is dead now. Like that money, that was just, it was coming from the meme coins and going to the perp dex farming. And then, you had all these new people that were trying to learn how to perp dex trade and stuff. And they got carried out. So that money's gone. But then the institutional flows, which are driving Bitcoin mostly, all that stuff is fine. They're not on Hyperliquid.
Yeah.
They're not perp trading on even Binance or anything. So there's ETFs. Like
ETH was fine.
yeah, it's higher than
If this had happened 6 months ago, ETH would have went down like 90%. I mean,
God.
ETH has a bid now, and that's really what I think.
Thank you, Chairman Lee.
yeah.
Thank you, Chairman Lee. Thank you, BNR.
The contra, just to play devil's advocate, I probably lean more towards you guys' take on that, is just go through the positioning of these alts. Like leverage is obliterated, and in a lot of cases funding's still negative. So there's squeeze potential. And the other thing is, say we get a break in a couple weeks or month of corn to like a real, and we're moving again in a upward trending environment. I kind of think that all the people that just got wiped are doubling down and trying to make it all back. So I'm kind of, and are they going to go 4x long corn to do that? Probably not. They're going right back probably to the same games.
Yeah.
They shouldn't.
I'm not recommending.
That's true. But our job is not to tell people what they shouldn't do. Our job is to try to predict what they might do.
Yeah.
So it's fair. It's a fair
Totally.
point.
And so I guess the big question now, just to play the tail risk situation of this whole thing is, obviously everybody's thinking about 2022, where it took a few weeks for the dead bodies to start to float up to the surface. It took a few weeks to understand how that cascaded into 3AC. So, like, okay, maybe, whoever got carried out is still trying to, go get some loans quietly right now to stay solvent. So I could also see the argument that we haven't seen any, you got to wonder, do we see more for selling? Do we see these dead bodies start to flow up in a couple weeks? And that could hamper the rebound. I don't know what you guys think about that.
It's definitely possible. I would say that it doesn't. I don't think it's going to be anything like a 3AC or a FTX situation, because in the 3AC situation, you had this one player that accumulated a massive loan portfolio and just completely blew up. And no fund today is capable of doing it. No fund today can get the same size in the market relative to where the market is on leverage and then blow up in the same way. There might market makers take loans all the time. It's very possible that there were market makers that blew up, and they do have debt. But it goes back to who's net long, like who's massively net long that has debt to repay, that's going to need to sell outright assets to repay that debt. There are not that many people. Even the people that blew up probably weren't massively levered long outright.
Even the DATs aren't levered in that sort of way.
No, the debt.
Yeah, well, the DATs are not. The DATs can't.
Equity funded.
Yeah.
They're fine.
The DATs are fine for now.
I mean, the prices might.
Because none of them got liquidated, as far as I know.
That would be crazy.
I mean, it'd be interesting to see what the market opens on those DATs. And actually, in half an hour, so I'm going to be jumping on the stream here to a DAT State of the Union panel, which will be, that's great timing. I'm excited to dig into that one. So we'll get some takes on how they think about the State of the Union. But yeah, as it stands now, I don't see why they would be a forced seller.
No, they're equity, and those management teams will hold on for dear life for their, they got incentive to not let go of those. I think, that was the big lesson in 2022. I don't think we're at that scale of a potentially this could have been a capital destruction event equivalent to some of the 2022 events. But the big learning there was don't jump to the gun, because you have to wait for the body, at least a body to float to the surface before you have a green light. Like I kind of lean towards the next 2 weeks. You can kind of wait for confirmation or just be patient, because I do still see a period of, from a flows perspective, earnings perspective, corporate blackout perspective, just I don't see a mad rush to get back in. So, but I wouldn't expect anything huge.
There's an argument to be made, though, that if things come back fine, you're not going to be able to get back in because so many people just invest.
Yeah.
And I tend to be an optimist when it comes to these markets and err to the side of getting a little bit early.
Yeah.
Rather than get in late, because it also psychologically makes it easier to hold that position and actually get in that position. And so because of what we just saw with this huge amount of de-risking, both in TradFi and in crypto, if the market continues to tick up and doesn't revert over the next day or two, I think you start to get some real FOMO back into the market and people start piling back in, because I think it's one of the hardest things psychologically
if you got liquidated
to lose money, have the market go down and then have it bounce right back. You get this, you one of two things happen, because I've seen this happen. They're fund managers, they're friends. You either turn into a perma bear.
Yeah. Oh, it's possible.
And you go, this market's a scam. Everything sucks. I'm going to short. And in that case, they're short. They're like upside liquidation fuel. Or you are like, I can't like miss out on the next run. I have to get in right now.
Yeah.
And I think that's why you like, I'm almost the opposite. I'm like, I kind of want to move fast into the market now. And if things don't move up quickly, then I'm cut bait. I'm cutting. I'm almost like, you know, that's the way that I'm thinking.
Yeah, to your entry too, because if you're buying up here after the big
rebound,
mean reversion bounce, but I agree. Like Bitcoin carved a beautiful, ETH carved a beautiful candle. Like you have to see stocks, even if stocks chop, we could be in a scenario where stocks are down a couple % from highs at the end of the month, and corn's kind of back to highs, and 100% like nothing happened.
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. Trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming-chartered special purpose depository institution, and deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders. The first machine economy free zone is live in the Emirates, and it's all happening on Peaq, the machine economy computer. Head to peaq.xyz, that's peaq.xyz, to find out how you can benefit from the age of automation, or click the link in the show notes to find out more. Shout out to today's sponsor, Katana. Katana is a DeFi first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion cat campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Oh, I was going to say, we haven't talked about gold.
Yeah.
And I think that the reason it came to my mind is because of what you said. Bitcoin can go back to all-time highs with equities down because gold is still ripping.
Yeah.
And it's like the thesis is playing out before our eyes. Where's capital going to go? Like we're flush with it right now. Central banks keep buying gold as well. And the higher gold goes, the better relative value Bitcoin looks. And I remember when gold was, I think it was when it was 2000, it was what, like 12 trillion or something like that. It was like 12, when it was $2,000, it was like 12 trillion.
Yeah.
And Bitcoin's almost there. It's within shooting distance. Like I would have said now, oh man, like maybe Bitcoin doesn't have great risk reward because if we're comping it to gold, like it's actually getting pretty close to that 12. Now gold's 25 trillion. And so now we have a much larger ceiling. And that's what makes me, pretty bullish on the market in general, is that we have massive tailwinds still.
For sure. It's very rare. I talked about this in my LP update call last week. It's very rare that gold is doing what it's doing while risk assets are at all-time highs and moving higher.
Yeah.
It's a very rare thing. And that, I don't think, we talk about debasement, we talk about fiat going to zero, but I don't think we quite even really understand how big of a problem it is, because normally gold is a safe haven asset that is a beacon in a storm, and people are rotating capital from a stock bond portfolio into it. And it's like, we're seeing every boat. And that's, to me, a sign of the actual liquidity and debasement issue, where all these assets are rising on a nominal price basis. And we are underestimating what that means for nominal prices in general. And to me, that's why Bitcoin is like this on 3 years, because nominally it is inflating, aka the denominator is deflating, and that is a strong enough tailwind for 15-20% a year. And then you get the big sailor front ran a bunch. We effectively in corn haven't gone anywhere since December 24. 10 months. Think of that. 10 months. Price hasn't gone anywhere. What's the move going to be when we get out of here? That's we're talking a November 24 or a October 23 move, in my opinion, when we come out of this.
The hard part is just
10 months of consolidation.
The hard part is how messy that process is because of all the leverage we just talked about. Like gold, it's just like, you look at CME positioning in gold, it's super muted. So it's just like constant TWA from central banks of China. And then Bitcoin, it's like, last week we saw that breakout to all-time highs, and then it's like, psych, everybody goes max long on leverage. The breakout, open interest explodes, and then you get one negative tweet, and then the whole thing just implodes. So it's just like,
and everyone's like, is it over? So this was the 4-year cycle top? And you're like, oh my God.
Dude, I think that is key, is that now you're going to get all the people that think, all right, 4-year cycle is over. We had that moment. It aligns the timing. And then my read is that I think 2026, like you look at that macro backdrop, it hasn't changed an ounce. For me, you got big, beautiful bill stimulus finally kicking in for good there. You got Jerome Powell getting replaced. Regardless if they can control the Fed, you're still going to have a super dovish Fed chair, regardless. So that's all going to happen. So I think you're going to get the people that are cycling out for the 4-year cycle. And then 2026 is going to keep coming in. That institutional bid, like, they don't really care about the halving cycle that much, right? Like, they're not.
If anything, they're going to do the math and realize, whoa, that's bullish.
Yeah, exactly. So they're going to keep bidding. And then 2026, I think it's going to catch a lot of people off guard.
Yeah, I mean, one thing about the 4-year cycle, and I've talked about this on a previous podcast on 1000X, is that it looks completely over. Because the 4-year cycle was driven by attention and adoption. That's what it was driven by at the end of the day. It was, people would talk about Bitcoin because of the halving. People would get excited about it. Bitcoin was hugely underowned by the entire world. And so you'd go through these boom bust cycles of massive adoption, a couple people fall off. Massive adoption, a couple people fall off, all centered around the attention cycle of the halving. Since the FTX bottom, if you're at home and you're watching this, or if you're watching it later, go on TradingView, put on a weekly chart of Bitcoin, and just tell me, and put on log. Does the last 2 years, 3 years look anything like any other year of Bitcoin?
No.
There's no parabola. There is no 100% in a week. It's actually a pretty gradual rise higher, because what's happening now is, I think we're past the attention phase. Now we're in the slow adoption phase. Everyone in the world knows a Bitcoin.
And you look at Bitcoin vol just like this at the same time.
Bitcoin vols, you can see like high 30s, 40s on options.
Yeah.
It's like we're in the slow adoption phase right now and allocation phase. Everyone knows it's not the attention phase anymore. So my view is that it can follow what gold did. I mean, you see gold went sideways for a while around that 3,000 or 3,300 level, went sideways for a while, and then just straight line up to 4,000. I think if Bitcoin manages to stay above 100,000 for the next month, you buy it and you can see 200,000 in the next 6. I mean, basically, unless it completely collapses, this thing is about to rip because of that dynamic, right?
Yeah.
Because there are a lot of people, OGs, that sold because
the distribution of the last 10 months is wild.
A lot of people.
Yeah, you got ancient wells getting
right.
Yeah.
Huge.
Yeah.
And guess what? I guarantee you they're back in if it starts ripping.
Have to. Like,
They're addicted. I know that because I anyway, it doesn't matter why I know that. What? I might be addicted.
Yeah. It's not just Bitcoin, by the way. It's Ethereum. When I talked to, if you look at the distribution, I talked about it last week.
Yeah.
It's a phenomenal amount of long term selling over in both. It's we're primed. You just need to get the geopol settled down. But either way, I mean, on a relative value, when you plot it versus stocks versus gold versus, I think people are seeing this, and what a better move before Bitcoin always does something. This reminded me of August 17, 2023. I don't know if you guys remember that. I remember it because I was on a flight to a vacation in the summer and get off the plane and everything got nuked 15%. Nuked.
Yeah.
Like everyone was like, what the heck just happened? It was August 2023, and that was a massive clearing event before one of the biggest runs in Bitcoin's history. It doubled in the next 4 months after that. I kind of think this was August 17, 2023, where everyone's kind of looking around like, what was that about?
Yeah.
No one really knows. And then all of a sudden you're like, wait a second, this is a great entry for every single person who wanted to get into the asset class that couldn't.
Yeah.
But part of it is a rotation out of alts. Like when alts get wiped, people consolidate into majors and they consolidate into Bitcoin. I mean, how much did they say was liquidated? 40 billion?
Something. Yeah. 20 to.
Yeah.
If you had 40 billion that shifted into Bitcoin, that's going to send the price higher. If you got half of that, if you got let's say a fourth of that capital comes into Bitcoin, because they're like, okay, I'm out, because the total losses are nowhere close to that. Total losses estimated 3 to 5.
Yeah.
Right. So there's still a lot of capital out there that can get into Bitcoin. Mm-hmm. If it says, if these people, if you, the listener, have the courage to issue all
buy my bags.
Yeah. Exactly.
And get long BTC. And I'll give you some numbers to back it up. I tweeted this, but for those that didn't see, if you're 10x long a 40 vol asset, Bitcoin, you're looking at about a 2% move a day. On average, the one standard deviation move is 2%. If you're long 120 vol asset, which is like a Solana or other altcoin, you're looking at a 7.5% move a day, standard deviation. That means if you're 10x long, there is approximately a 20% chance that you will get liquidated on a alt position, and about a 0.001% chance you get liquidated on a Bitcoin position. Huge difference.
Yeah.
So like, I guess what I'm trying to explain to you is that the risk profile actually, to me, always makes a lot more sense to go bigger on the large caps than to go, to basically take out leverage on the large caps than to take out leverage, even much less leverage, like a 3x, 4x long on an alt versus a 10x long on a Bitcoin, in my mind, are comparable things.
Yeah.
You look at the upside the last few years, even only adds more credence to that. Because you're not playing for the same alt upside you were 3 years ago. You get,
all right, we got 2 minutes left before we wrap up and go to the next thing. But just want to hear you guys super quick. How are you navigating the next month or so? It sounds like we're all kind of in agreement. It's like you still have this pocket until the end of the month because of that possibility for Trump and Xi Jinping to keep going tit for tat higher, and then that off ramp. So how do you guys think about that for the next month or so?
I mean, my answer is I'm in the market right now. I'm a buyer now, and if nothing happens in the next 3 days, then I'm out. But I think now is the time to move fast, personally.
Yeah, I'm a believer that this move out of here, if and when we get it, will be dramatic and sustained. So I'm maybe in a little less of a rush. I'm sort of in like scale in mode over and if you get confirmation of a move higher, slam, or if you get a pullback into value, slam, and kind of strategic that way. I think if the biggest mistake you can make is taking this one-off event as like, shading or dooming the prior view. And kind of leaving the market, because it's these things always happen, like darkest before dawn type of thing.
100%.
All
All right, that's all we got for this first segment. Avi, thanks for joining me.
Thank you so much.
Yeah,
It was really fun.
Yeah,
It was really fun, guys.
Yeah,
It was awesome.
All right.
Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.